Good morning, everybody. This is Alex, Senior Account Executive at GDMFX with your European Session Outlook. We'll start with the North American markets. We had a whole slate of Canadian CPI data on Friday, and it came out very positively for their currency. The exact numbers are CPI index core month on month, 0.4% higher than previous at 0.6%. CPI year-on-year, 0.1% better than expected at 1.3%. Bank of Canada CPI index core month-on-month year-on-year, 0.4% and again 0.4% better than expected. CPI index month-on-month for Canadian dollar is as expected. The effect of this was the USD Canadian dollar 63 pips down, so it gained some strength. We also had one event from the US, that's the market manufacturing PMI, and it came out 1.2 worse than expected at 50.8. A Friday surge helped to push the dollar to its strongest weekly gain against the yen since November 2014. Reports that the Bank of Japan was weighing whether to extend negative interest rate loans to banks. A move analysts said would be tantamount to paying banks to borrow money. This helped drive the massive rally in the dollar. The movement was USD JPY 235 pips up. The Nasdaq ended 19 points down. The Dixie is up to 94.93 from 94.59. Today's events, we have new home sales month on month, new home sales change month on month, and Dallas Fed Manufacturing Business Index. The FOMC rate decision is top event risk for the dollar this week, but be prepared with the market certainty of no change in the interest rate. Dollar traders should keep an eye on the euro's bearings and the yen's reaction to the Bank of Japan decision. The events for the week are from the US Tuesday, durable goods orders, Wednesday, Fed interest rate decision, monetary policy statement, and Thursday, GDP. In Canada, on Tuesday, we'll have Bank of Canada Governor Polo's speech. All right, in the European markets, Friday's events came out with mostly negative results. We had the German market manufacturing PMI composite. It's 0.2 less than previous at 53.8. The German market services PMI worse than expected with 0.6 at 54.6. The German market manufacturing PMI is better than expected with 0.9 at 51.9. Euro market PMI composite worse than expected with 0.2 at 53. Euro market manufacturing PMI worse than expected with 0.3 at 51.5, and Euro market services PMI worse than expected with 0.1 at 53.2. The DAX 30 ended up with a dodgy. CAC 40 is up with only 13 points. The Euro Canadian dollar is down with 150 pips, and Euro GBP is down with 92 pips. For today, we have German news. The German IFO will be coming out with the business climate for April, the current assessment for April, and the overall expectations for the economy. Friday will be the most important event. The European Eurozone is having its CPI data. On to the UK markets. In a week where politics overshadowed economics, the sterling continued to gain ground against the dollar and the euro. The British pound gained an overall of 1.3% versus the dollar and 1.7% versus the euro and extended its gains for a second week. The data from opinion polls suggesting that the UK public is leaning towards staying in the EU has dominated the investor sentiment, even after data show that earnings and retail sales decline. GDP is also expected to underperform, with expectations are for a 0.4% growth. The FTSE 100 lost 40 points and closed at 6,274 on Friday. 10-year gilt yields closed at 1.48% on Friday. GBP traders were presented with quite big movements on Friday, and whoever took advantage most likely has seen good increases in their balance. The GBP USD 75 pips up on Friday, GBP JPY 415 pips up on Friday, 485 pips range. Against the Australian dollar, 175 pips up Friday, 270 range. Against New Zealand dollar, 275 pips up, 380 range. Against the Swiss franc, 120 pips up, 175 range. For the week, the market events will be, we're going to have the gross domestic product quarter on quarter and year on year, GFK consumer confidence, mortgage approvals, also index of services, CBI distributive trade survey, nationwide house prices month on month and year on year, net lending to individuals, money supply month on month and year on year. This will be all for UK for this week. All right, on to the Asian and Pacific markets. We had Japanese news, the coincident index for February 8.4, higher than previous at 110.7, and leading economic index 4.4, less than previous at 96.8. On Friday, the yen fell 2.1%, its biggest fall since the day Bank of Japan Governor Kuroda unleashed his second easing in October 2014, after Bloomberg reported that the Bank of Japan is considering applying negative rates to its lending program for financial institutions. The big fall was likely driven by selling from speculators who had held a huge amount of yen long positions. Data on Friday showed that currency speculators held a record yen long position in the Chicago Futures Exchange last week, but traders are also wary that further Bank of Japan easing may have limited impact in weakening the yen, as did the introduction of negative interest rates in January. Japan's Prime Minister Shinzo Abe said Sunday he will create an extra budget to address the economic damage caused by deadly earthquakes in Kumamoto earlier this month. Abe wants to pass the budget before the current parliamentary session ending on June 1st, which comes ahead of an upper house election in July. The earthquakes, which killed 48 people, have dealt a blow to policymakers struggling to gather momentum for an economic recovery. Asian shares fell on Monday, with investors watching China closely on debt restructuring efforts and awaiting key central bank meetings this week. The yen hit a 3-week low on Monday on expectations the Bank of Japan could start lending to banks at negative rates, while sterling hit a 5-week high in reaction to President Barack Obama urging Britons to stay in the European Union. The Nikkei was 445 points up on Friday as a result. Wednesday, we're going to be seeing the Bank of Japan press conference. And on Thursday, we're going to have the interest rate decision from Japan, employment data, inflation data, industrial production, and retail trade. So it's going to be very important for the yen this week. In the Pacific, tomorrow, the New Zealand trade balance reports are due month on month and year on year, along with exports, imports. Following the next evening will be monetary policy statement along with the rate decision. A few lower volatility reports by the end of the week for the Kiwi, including the building permits, business confidence, and money supply. No rate changes are expecting. However, there might be changes in the monetary policies, as the Kiwi dollar is still quite expensive for the economy. The Aussie week will start on Wednesday at the beginning of the Asian session with the major inflation reports, and will end Friday's Tier 3 private sector credit month on month and year on year, PPI quarter on quarter and month on month, and that's all. No major events for the New Zealand dollar and Australian dollar, and no major movements. All right, on to commodities. Crude oil prices paired gains in early Asia trade Monday as traders took profit after a strong rally last week on signs that the global oil glut might start to ease in the coming months. Gold was $18 down on Friday. Gold prices continue to consolidate the gains from the beginning of the year, as the yellow metal has traded sideways for 10 weeks now. Gold is currently caught in a battleground of a low rate environment and rising risk assets, with the US dollar being the arbitrator. For gold trading this week, we should be watching Wednesday's FOMC rate announcement. It could catalyze a breakout, and we need to watch retail trading sentiment through the announcement for directional clues. All right, thank you everyone. This was this week's Monday Outlook. Thank you for the attention. I'll see you next time. Goodbye.